just turning out to be. We did see a big crack, and the revival of the Nifty is a story for Friday.
Okay.
I'm sure a lot of the investors are feeling, TGIF. Thank God it's a Friday, but they'll take heart from the fact that finally Nifty's come back into the green or red, as we speak again.
Yeah. So, what should broadly the move be? Of course, this week we've seen some bit of pressure, but what about next week?
So there could remain this pressure on the markets, and one of the reasons why we are seeing this pressure is because the FIs have been selling quite predominantly, and the selling has been in the large cap names. So even if you take Bank Nifty for example, HDFC Bank, which was seeing a good move, around the 1750, 1800 mark, resisting and consolidating around those levels, cracked. Now, that's where the pressure is, and since the big names aren't participating, the recovery is a little circumspect, a little doubtful. So the texture might remain sell on rise. So just be a little cautious, till the time the results don't come out as expected or better.
Right. Welcome, guys. So we're going to chat with Kush Bohra, a technical expert and someone I lean on in terms of understanding what's happening with regard to technicals and charts. And we're just talking about how markets will react maybe over the next week or so and what to expect, because we've seen this deep crack in trade today, but we've also seen a decentish recovery. So volatility is slightly elevated. And let's talk levels first off. Kush, 23,400, was that the level from where the Nifty will continue to bounce back? If at all we were to see some pressure again?
I'll bump it up a little, 23,500.
Okay.
And the reason being, if you see in the last 14, 15 odd sessions, Nifty's actually hit the 23,500 mark or thereabouts and then rebounded. Remember, on the channel, on the show, as we've been talking about 23,900 to 500 being that broad range. Today, again, while the Nifty did slip significantly below that, it's again reclaimed that level, and you can see the option activity also suggesting something like that. So for me, 23,500 is the line in sand. If we close above that, then the November lows of 275 thereabouts, come into play quite immediately, and then 23,000. So 23,500, as long as we respect that, and if we move sideways also, that will be something that bulls will take, with both arms, both hands open, because of the kind of fall that the markets have been seeing. So 23,500 level to watch for.
Right. I'm already starting to see questions. So I want to invite viewers, please share your questions. I can share it with Kush and get some perspective for you guys. But I'm going to stick to a couple of general questions before we get to that. So Kush, two takeaways. 23,000 could be tested if we close below 23,500 today. Right. What if we close above?
What will happen is that markets will start, getting into a hope of a rebound trade, which technically is anyway building up. Up until yesterday, there was a positive divergence, on the daily charts on the Nifty. PCR was coming very close to oversold territories, and just by observation, if not by technical levels, we know that markets are slightly oversold, right? So that rebound is not out of the woods yet. But right now, the way things are shaping up, it will perhaps be that. It will be a rebound. It will not be something of a recovery. So I'm watching for a level of 24,000 on the upside, 23,900, 24,000. Wow. If that is taken out, do you consider any kind of
as early as end of next week?
A little unlikely.
Okay.
A little unlikely.
So maybe slightly more prolonged. You're taking a longer approach, maybe over the next 2 weeks.
Closer to budget, because some positives and some optimism might start to build in, and you might see some recovery around those closer to that date. But up until then, the texture will remain sell on price.
And what should you do at this point then, therefore?
No, because you can't go short. Because you can't go short, and the reason I say that is because markets are already down and close to support zones. You wait for a rebound, right? You wait for a rebound closer to the 23,700 marks. Somewhere a little higher than that. You take that opportunity. You play the range, 23,900 and 23,500. You play the range with 23,900 as your stop loss. Closer to that level, you create an opportunity to sell.
Understood. And how do you? So I have a viewer who's asking, how do you protect your money in today's market? Well, the kind of volatility that we're seeing, I think it's relevant to understand.
For sure. So, depends whether you're a trader or an investor. If you're an investor, then what you could do is perhaps, you could rebalance your portfolio, switch more to large caps, and that's where some protection comes in. But if you're a trader, it's not a bad idea to buy put options. it's a strategy as old as derivatives itself. Not a bad idea to buy puts. The price of buying puts is fairly nominal, correct? I'm assuming this compared to a fairly decent size of portfolio. Now, what happens is that if the markets do go down, it gives you that cushion on the downside, especially when the fall is as exaggerated as what we've seen in the last 5 sessions. So, a very simple strategy is just to buy puts because stop losses can protect you during the day. But what about an overnight gap down kind of a risk, right? That's where buying puts helps.
And how do you look at the Nifty Bank, Kush? Because yesterday you were, at least on the closing show, you were quite bearish. In fact, you were bullish on the short call with regard to the Nifty Bank. If I
like how you put it, Hersh. Bullish on the short call. I have been a little cautious on the Bank Nifty for the week, right? And the moment it broke the 200-day moving average, which Nifty had already done, but Bank Nifty didn't do. Even in the November fall, by the way, Nifty actually closed.
Which is what level, Kush?
For Bank Nifty, the 200-day moving average now sits at 50,800. So if you'll recall, in the November fall, when the markets had actually given up quite a bit of gains, Nifty breached the 200-day moving average, but Bank Nifty just pinpoint took a support at that level and moved higher. This time around, it broke below that, and since then the view has been bearish. We continue to maintain that view. Again, from a very near-term perspective, a rebound's around the corner, but I think 48,500 is the next level to watch for on the downside.
Right. And what about HDFC Bank? That's a question that I'm getting as well. So, it's been one stock which has really taken a little bit of a beating over the last few sessions. That also, I'm not trying to exaggerate this. So frankly, just trying to be as cautious as possible. A beating is an understatement looking at that chart there. But so what next for HDFC Bank?
Yeah, I was just going to say that beating is an understatement. See, we were constructive on HDFC Bank. If you're an investor and if you have a view anywhere longer from 6 to 12 months, I think this yet again might prove to be an opportunity for you to go long on HDFC Bank. Because if you see the range, that the stock had for a while was about 1600 on the downside to 1800 on the upside. We did stay above 1800 for a while before giving way. Now we're again closer to the lower end of the range. There's a possibility that we might perhaps slip a bit further. But from there on, buying opportunities emerge on HDFC Bank. Might not be an immediate trade. Might not be something that you get 3 or 5% kind of an up move. But if it consolidates, so I think from a 6 to 12 month kind of a horizon, 10-15%, maybe even higher, not a bad idea, not a bad move on HDFC Bank. So accumulate on this decline.
Okay, so HDFC Bank accumulate on the decline. What do you do with IT today, Kush? It's moving in a completely different direction. It's in a different universe of its own. So what to do with IT?
IT has been moving slightly differently since the election of Mr. Donald Trump. Now that he will be coming into power in 10 days from now, reality will set in, correct? But if you see, a lot of that reality has set into the stocks already. The likes of TCS, barring today's move, the likes of Infosys, correct? Some of these stocks have already seen profit booking from higher levels, right? The only stocks, the handful of stocks that we like in this space are HCL, Persistent, FSL to a great degree, which we've spoken about extensively on the show, and it's been hitting targets. So some
HCL, Persistent, FSL. These are 3 picks in this market.
Picks. Yes.
Buy calls in this market, which Kush has given. Yes, sorry, go ahead.
Yeah. But other than that, I am not very sure whether these moves on IT will be sustainable. Even if today you see, TCS is holding above the supply zone of, 4200. But not sure, maybe in the coming days it might see some profit booking. So just a little word of caution on TCS and Infosys both. So
if I'm getting this right, more likely 51% plus chance of a long on Nifty, 51% plus chance of a long on the Bank Nifty, but a short on the IT index. That's how you're playing this at this point.
That sounds exactly the opposite of what I've been thinking or I've been saying. Only on rebounds. Nifty and Bank Nifty are only for a rebound trade.
Right.
Other than that, the texture is a little somber.
Okay. Do you think Nifty will reach 26K in 2025?
In 2025?
Yeah.
Very bright chance.
Very
bright possibility that Nifty might reach 26,000 or perhaps even higher in the year.
Okay. Is this the point when you start buying? Because if 26K, there's a bright chance. Is this the point you start buying at?
You know what's difficult is to time the market, and just as that goes, right? Even for
that's what we're trying to get you to do, Kush. Anyway,
yes. We say that the only ones who can time the market consistently are only two people, right? One is God, the other are liars. Okay, so you can't time the market and you can't have a pinpoint view. But let me try and answer that. If I were to build a portfolio, if I had fresh money to allocate, this is where I would start allocating 20% of it.
Understood.
Every 3%,
That's great
2%
advice.
fall from here on, I would perhaps keep adding on. If I have an SIP going, I will not stop it. In fact, I might double down on it. It's not that the Nifty can't see lower levels from here. We've been talking about that Nifty might. But it's just that now that a lot of quality stocks that you wanted from the large cap names are 10 to 15% off their highs.
Yeah.
A lot of good mid cap names are off about 30%, 40% of their highs, maybe more. So you know that you're off high. So you've got that safety margin, right? So not a bad time to start allocating funds.
And so 20% today. When's the next 20% tranche? At what point?
So I come from a very technical view of the market. So for me, these levels matter. So
right.
Every key level, every key support level that the market tests, I will deploy. I will go all out, or perhaps maybe about 70-80% allocation if the markets were to reach 20 to 500.
20 to 500, okay.
So in between also, every 2%, 3% kind of a dash, or a drop I would consider.
So maybe another 1,000 points from here, if that were to happen.
Technically, that seems like a very strong support zone for the market. So if if we do close below 23,500, 23,300, 23,000 immediate supports, but then a meaningful one comes in at 22,500.
You've spoken about broader markets as possible buying opportunities, at least in the medium term. But at this point, what should you do? There's so much pain. Yeah. It's difficult right now when you're looking at portfolios. So what should you do at this point?
I hear
with
you,
some
Hersh.
with some broader market names.
Sure, I hear you. I hear a lot of similar commentary from friends, investors, viewers I've interacted with, and that pain is very real. But let me just try and put that in context. I've been mentioning this for a while. 4 years since COVID, the markets have not seen a meaningful price correction. But even if it has, it's rebounded quite smartly, quite sharply. Okay. But I think this is the first time in 4 years that markets are seeing time correction. And now investors are starting to come to terms with reality that time correction hurts you more than the price correction itself, because everyone's so used to seeing a 2-day fall and then a rebound on the third.
Then you reload, and then you see a rebound.
Absolutely.
So you make your money.
Absolutely, right. So that is what everyone's used to.
Right.
A lot of investors, especially the ones who started in the last 3-4 years, are feeling this pain exaggerated because they've not seen this. So my suggestion to you is just hold up. We are still in a bull run. It might not feel like that today, or it might not feel like that for the last week or so, but we are still in a bull run, which is going to last maybe a few more years, right? So be patient. It hurts, but there isn't much you can do about it if you're an investor, right? I mean, it's not like you're a trader and you can go out and hedge every day. But if you've got capital to deploy, gradually keep deploying that, and this too shall pass.
Okay, what do you do with TCS? TCS se kya kare yaar? Because the kind of move we've seen today, 4%, बड़ा मूव आया है आज.
तो बहुत ब्राइट पॉसिबिलिटी है कि ये जो 4200 का मार्क है, इसके ऊपर अगर आज हम क्लोजिंग देते हैं, जो फिलहाल सेटअप देख के लग रहा है, बिकॉज जो गेन्स थे दिन के वो अब तक गिव अप नहीं हुए हैं, इनफैक्ट उन पे हमने एडिशन ही किया है. तो वाइल मैं थोड़ा सा स्केप्टिकल हूं ऑन टीसीएस एंड इन्फोसिस, मेरी टॉप पिक लार्ज कैप नेम्स में एचसीएल टेक है, लेकिन अगर हम 4200 के ऊपर क्लोज देते हैं, जहां 20 और 50 मूविंग एवरेज कन्वर्ज हो रहा है, इसके ऊपर क्लोजिंग देने से हो सकता है कि सेंटिमेंटल और टेक्निकल बूस्ट मिल सकता है स्टॉक को. अगर आपकी फ्रेश पोजीशन रादर आपकी पोजीशन है, तो अब मेरी सलाह रहेगी कि 4150 के स्टॉप लॉस से इसमें बने रहें. फ्रेश पोजीशन के लिए मैं कहूंगा थोड़ा सा वेट करिए.
ओके कुश, थैंक यू, बहुत धन्यवाद. You've given us good views. Hopefully this is helpful to all of you. We've tried to address some of the many queries that have come in. Thank you so much for tuning in. From Kush, myself, everyone who puts this together, thank you for watching.